Are you someone who loves a good deal, loves getting a discount? If so, it could be the very thing that's destroying your property investing and wealth building success. Hi, I'm Nero from Investment Rise, and I was recently speaking to a client of mine. He said, Nero, I'm from an Indian background, and I'm someone who loves a discount. I'm someone who loves a good deal. And he said that when he went to buy his first investment property, this was in the Sydney market, around about 2011, 2012, he said he was only focusing on getting a discount. And he said that he kept trying to get $15,000 off the price at the time. Right? And of course, the market was rising, so nobody gave him a discount. And what he found that within a couple of years, the property that he was trying to get this discount of $15,000 on that he kept missing out on ended up rising by $50,000 or $60,000 in just that short amount of time. And he quickly realized that if he kept focusing on a discount, he'd often end up missing out on getting properties in good growth locations because they were rising in value. And so what he then decided was that when he looked for his investment property, he changed tact. He said he was happy to pay the price that someone was asking for as long as he expected there to be good capital growth potential. And ironically, when he then went to find another property, he ended up having to pay $15,000 more than the purchaser was initially asking for. So now he's having to pay 15 grand more than the price when he was someone who actually wanted to always get a discount of 15 grand. I'm not sure where the $15,000 figure came from. I think it was a random arbitrary figure. But ironically, he ended up having to pay $15,000 more than the asking price because there was so much competition in the marketplace. Yet today, that property is now worth $150,000 more than he bought it for. Right? So, and I see so many people out there who are focusing on a discount, focusing on getting a good deal. But here's the thing, when you're buying property, what you want is you want there to be good capital growth potential. You want to be buying a property today in a market that you expect to start growing soon or is growing right now, that's going to be worth more in the future. But if you keep focusing on a discount, right, you're almost certainly either going to miss out on opportunities like this particular client did, or you're going to end up buying in the wrong kinds of markets. I mean, there are so many people out there, especially certain buyers agents, who will charge you $15,000, $20,000, $25,000 at the cheaper end, maybe 10, but as I said, all the way up to $25,000, and many of them will justify that price by saying they'll then negotiate a discount of the same amounts. In other words, they're saying, if we charge you, say, $15,000, we'll negotiate $15,000 off the purchase price, so our fees are essentially free to you. But you've got to ask yourself this question. If they're able to negotiate a discount on the price, how good is that property? How good is the location that they're buying in? For example, many buyers agents will secretly tell you that they were unable to operate in the Sydney and Melbourne markets during the boom time. Why? Because prices were rising steeply, and so they couldn't justify the discount because it was virtually impossible to get a discount. Today, many of those agents are operating, especially in the unit market, where they're saying, we'll get you 15 grand off that two-bedroom unit, maybe in Sydney or on the Gold Coast, for example, or somewhere in inner city Melbourne. But you've got to really be careful. If you're focusing on the good deal, if you're focusing on getting a discount, if you're focusing on something that might seem too good to be true, it often is. Instead, what you really want to be doing is, like this client of mine had learned through experience, find areas in great growth locations, pay the price today, expecting growth in the future, because ultimately a successful investor over the long term is buying the price in 5 years' time or 10 years' time in today's dollars. That's what you want to be doing, focusing on getting into the market when it's growing, so you can get capital growth and you can grow your wealth. If you want a discount right now, sure, I can get you property in Darwin, I can get you property in Perth. Can I get you a discount? No problems at all, of course. But here's the thing, whatever discount I get you, maybe 15 grand, 25 grand, even 50 grand, the property may only be worth that, may drop to that value in a few years' time. Okay, so one thing I've learned from my 17 years of investment experience, you almost only get a discount in a flat market or a dying market or a falling market. Is that the kind of market you want to be investing in? If so, then go ahead and do so. Go ahead and get that discount. But if you're someone like me who believes you should be investing in growing markets in order to get capital growth and use that property to leverage and leapfrog into building a property portfolio that you can use to sustain you in retirement, that you can retire off, then focus on the market, focus on the capital growth potential, stay away from trying to look at a discount. You're not buying groceries here, you're investing in your future. Focus on the right locations, stay away from the good deal and the discount. It's often going to cost you way more than you think. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a free half-hour phone consult with me personally. Either way, thanks again for watching.